Good morning. Welcome to Stock Market Today. It is Friday, January 29th, 2021, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So Friday at the end of what can only be described as a wild week. Let's get into it. U.S. equities finished mostly higher in Thursday's trading. All sectors were higher. Financials, materials, and industrials were the best performers. REITs, the consumer sectors, as well as technology lagged. Treasuries were weaker with the curve steepening. The dollar was stronger against the yen, weaker versus the euro. Gold finished down 40 basis points. Silver ended up 2.1%, and WTI crude oil settled down about 1% on the day. Now, as we get to the desk this morning, futures are under pressure. S&P futures are down 60 basis points, but off the worst levels of the morning. That's after Asian equities were lower overnight. And European equities are under pressure this morning. Treasuries are mostly weaker with the curve steepening. The dollar is stronger against the yen, flat against the euro. Gold is up 1.3%. WTI crude is up 0.5%. As we enter the final day of the week, we've seen some pressure. We don't want to be aggressive yet. Our indicators have room to oversold positions. Now, we've been talking about it in our notes for a while. Our overbought, oversold indicators at Chaikin Analytics have been overbought for some time, and we've been talking about how we want to use that information to calibrate aggression levels, right? Not be overly aggressive on the long side when overbought within the context of an uptrend, and that's what we've been. Now, we're working off those overbought conditions, but do have room to oversold levels, so not aggressive yet. I do think that there are going to be opportunities as we get towards oversold and if key support levels holds. What are those levels? The same ones we've been talking about for weeks now. For the SPY, 360 to 370 are the levels you want to watch, then 340 below that. As long as we're above 340, I think we're playing for 413 to the upside. Qs, 300 is important in the near term. We want to be watching 300 closely. For IWM, 190 to 200, then in the 160 to 170 range. So the trend is still up until proven otherwise. We have an interesting dynamic at play where those short squeeze stocks that have ripped higher have caused pain for some big investors. And what those investors have then had to do is de-risk their books, right? And de-risking their book doesn't mean just covering those shorts. It also probably means just kind of taking down their gross exposure in general. So you're seeing some sell-offs in the names that they are long. It's an interesting dynamic, but I think it could present an interesting opportunity when we get closer to oversold levels. If we get closer to oversold levels and we're above these key support lines that we've been talking about, there could be opportunity. You want to drill down on some of the names that are market leaders and look for potential opportunities there within the key themes that we discuss day in and day out, week in and week out in our notes to clients. So let's talk about what we're writing about in our market in a minute. Well, stocks rebound, but as I said, there's room to oversold. Transports are at actually an interesting inflection point. We're going to take a look at that a little bit later on in the show. Interesting dynamic that I've pointed out in my note today is that while we've been talking about how the markets are overbought, we don't want to be aggressive. What we've actually seen over the past week or so is that most of the sector ETFs have seen their rating shift to neutral here within Chaikin Analytics. So that's an interesting confirming data point to some of what we've been talking about. We are seeing some signs of de-risking in the market. And as I said, futures do point to a lower open here today. Now, as we look at the major indices from a power bar perspective, the Dow tacked on 89 basis points yesterday, 9-4 bulls to bears. S&P up 80 bips, 135.71 bulls bears there. NASDAQ small underperformer, 59 basis points, 27.20 on the ratio. Small caps underperformed, 773 to 124. So a little bit of deterioration in the small caps here in the near term. Remember, they have been absolutely outsized leaders over the past few months. Bonds downticked. Financials best group up 1.83%, 41-4. Bulls to bears in the financials sector. According to the Chaikin Power Bar, small cap stocks and large cap stocks strongly bullish. Let's hit our stock of the day. Now, while we're not being overly aggressive, we still want to be doing our work and looking for potential opportunities. And I think Target is interesting. It's a very bullish stock. Closed at 183.58 yesterday, up 2.97%. We are in a strong trend above that rising long-term trend line, which has acted as support. And we're in a strong industry group. Multi-line retail is a strong industry group. Bullish money flow, an outperformer. And what we see here is the overbought, oversold indicator in oversold conditions, but still heading lower. So I think the way to look at this is as this starts to round up, it presents a compelling opportunity, in my opinion, on the long side, especially as markets work off those overbought conditions. So it's a name that I wanted to call out. Depending on how aggressive you are, you can do your work around that, knowing yourself, right? I just want to point out potential ideas. This is certainly one that I'm keeping an eye on. Steady uptrend, oversold within the context of that uptrend. If market dynamics become a little more supportive, to me, this is the type of name that you want to maybe be paying attention to. So take a look at Target, put that one on your radar screen here today. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days of trading. You can see kind of that de-risking going on as you have REITs, staples as the only two green groups over the past 5 days, and you have utilities also towards the top of the list. Comms are interesting because they have some offensive and defensive properties, but that's your top four. Middle of the road, tech, healthcare, industrials, lagging of late, discretionary fins, materials, and energy. So we've seen those cyclical value kind of reflation, reopening themes, giving some back. I've been writing about it this week about how it's become a little bit crowded. So some ebb and flow within the space. Again, a lot of moving parts here and a lot of interesting dynamics. I think that zooming out, regardless of the dynamics, or you want to be in a position to take advantage of opportunities, those opportunities being when we get closer to oversold while holding key support levels. At the same time, having a disciplined risk management process will make sure that in the event of a bigger drawdown to those levels, cash levels kind of rise, and you're in a position to redeploy when the time is right. So let's talk about the banks a little bit, because this is kind of interesting timing here. Over the past 6 months, banking services, KBE, the ticker there, has outperformed, right? It's been a group that we've been talking about for a while, leading the S&P by nearly 24%. Power bar ratio, very strong, 61-0 bulls to bears. It's number one of 21 subsectors. BPOP, PACW, and UMBF all have very bullish Chaikin Power Gauge ratings here within our model, all three holdings of KBE. So KBE is kind of interesting because remember, a couple of weeks ago, we were talking about the start of earnings season for the banks. And we said, well, the banks are going to enter earnings season overbought. And largely speaking for the banks, earnings season was a sell the news event. And that has kind of led to a pullback in the fund, which has produced now an oversold position. So if I'm thinking about the markets in general, as we work off those overbought conditions and work our way towards oversold, what are the leading sectors and leading areas of the market, this one being an industry group, that are also oversold, that could present compelling opportunities? I think you have a pretty clear line in the sand here between $40 and $42. You want to look for, some oversold. We're still heading lower as it starts to stabilize a little bit. Maybe you start to see some opportunities there for those of you who are kind of into the patterns. I guess you can call this one big year-long cup and handle. So that's kind of interesting as well. Something to be mindful of if you're using this time to put lists together and to kind of just be mindful of what's happening in the market. I think you want to be paying attention to what's happening here within the banks, within KBE. It's kind of an interesting dynamic that's playing out. It's one that's certainly on my radar screen that I'll be paying attention to. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers. L Brands, some commentary about holiday sales comps, sent that stock higher by 10.36%. AAL up 9.3%. On following their earnings announcement. Abumed earnings report send the stock higher by 8%. BKNG, not sure, didn't see anything company specific there, up 7.85%. And Freeport FCX catching a little bit of a bounce here. This one's been under pressure of late. Freeport up 7.75% on the day. Loser side of the board, LUMN, bullish stock here at Chaikin, but Morgan Stanley downgraded the stock, down 22% yesterday. IRM 9.73%. Some profit taking after recent strength in that name. Viacom caught a downgrade at Credit Suisse, down 9.6%. Kroger caught a downgrade at Telsey takes 8.7% out of that stock, and Whirlpool, WHR, reported earnings, and that stock was lower by 8.38% on the day. Let's take a look at what's happening in the markets, and you're seeing some signs of de-risking. Largely, I think, a function of what's going on with those short squeeze stocks causing just overall de-risking and lower gross across some of the books on the street. Take a look at the equal weight discretionary relative to the equal weight staples. Solid uptrend that we can argue it became a little bit extended from the 200-day moving average, which is also moving higher. And now we've seen some de-risking within the marketplace to weigh on it here in the near term. Now we're holding above a key support level, so that'll be important. At the same time, RSI is holding bullish ranges. So I think this feels to me like a near-term phenomena. We want to keep an eye on it. But I think it's going to present an opportunity. And by it, I mean the kind of the de-risking that's going on in the marketplace right now. And I think it's going to present some opportunities for diligent investors who are mindful of the roadmap and kind of suss out those opportunities. We looked at the banks earlier, right? I mean, I'm going to spend some time looking through the banks ETFs for potential opportunities and names, thoughts, ideas. I think that's kind of a compelling way to think about things. But ultimately, we want to be open to kind of anything being possible, which is where a solid risk management process comes into play. But we are seeing some signs of de-risking in the marketplace. Another sign of de-risking in the marketplace, again, similar dynamic. Look at high beta versus low volatility. This also speaks to a little bit of the crowdedness of those value cyclical reflation type ideas. High beta has a lot of exposure to financials and energy, part of that group. And, it's been outperforming relative to low vol. We had a breakout. And again, just kind of became overbought, became extended relative to the 200-day moving average. And now we're checking back as there's been some de-risking in the marketplace. No real technical damage to either of these trends at this point, but we just kind of want to be aware of what's happening and why it's happening. I think the why is kind of interesting here because it could present an opportunity. Again, zooming out a little bit, being mindful of the roadmap, paying attention to what's going on within the marketplace. I think that's kind of interesting. At the same time, we're in the middle of earnings season, and you're just kind of seeing, for the most part, I think earnings has been a sell the news event. So ultimately, I think that near-term consolidation that holds key support levels could serve as a bit of a reset. And then as we work towards those oversold conditions, you can take a look for opportunities in leading areas, right? Like names like Target that we were highlighting earlier. And, as I said, I think transports could be an interesting tell here as well. Take a look at IYT, the iShares Transportation ETF, right? Solid uptrend, but some stalling activity here over the past couple of months. Now we're holding the breakout level above the rising 200-day moving average. Thus far, no momentum damage done from an RSI perspective. We're holding bullish ranges. Now, what's interesting to me is that on this recent high, we did not become overbought. So that's just kind of something to be mindful of. I think that if, we start to see transports break down as key support levels for the major markets are being tested, that's information that we want to be aware of. And you take a look at transports on a relative basis here at the bottom of the chart. They're kind of dancing with a potential breakdown level. So again, part of the de-risking that's taking place, part of the kind of profit taking within the reflation cyclical theme. So we're watching all of this, and it's a fascinating dynamic that's playing out, and we just want to be aware of it. As it relates to how aggressive you want to be within your portfolio. Obviously, that's unique to each individual, right? You only know you and how aggressive you like to be, what your risk tolerance is. So kind of using that as a framework and then kind of making it your own makes the most sense to me. So that's going to wrap us up on a Friday morning. I hope everybody is well and safe and has a great weekend. If you haven't already, take us for a test drive. Head over to chaikinanalytics.com/test drive. I will be back with you on Monday. Be well, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.